Hi everyone, a very warm welcome to everyone who's joined the session. I am Shivani Roy. I'm the one who sends you emails occasionally. I'm also the one who runs the webinar program at LeadSquared. So thank you so much for joining the session. Some of you may have come from the LeadSquared promotion. Some of you may have come from emails you got elsewhere. So thank you so much, even social media. So hi to those people who've joined these webinars for the first time. We welcome you here. So today we'll be talking about finance entirely. It's exclusively for folks in the finance industry and it's on digital transformation. So some of the things we'll be talking about today are the state of digital transformation in BFSI, different industry trends, and the various technologies that are providing a win-win for consumers. All right, so before we get into the session, I want to know more about you. So does our speaker. So I will get to him in a bit. Before that, audience, I want you to answer some questions. It's going to be very simple. Just tap the option on the screen. So here goes the first poll. This is just for us to get to know our audience better today. Which financial sector do you work for? Is it banking services? Is it insurance business? Is it loan or lending businesses or wealth management? And of course, we have others as an option. So please write your answer in the chat panel. Also, there's a chat box, there's a question panel available to you. Let us know which financial sector do you work for. So Parth, before I introduce Parth, let me tell you Parth's our speaker and I'll get to him in a bit. Here's the basic roundup. 83% of our audience has voted today and they're saying 53% banking, 21 say others, 26 say wealth management, and 16%, oh, it's gone up, 20% say insurance businesses. So thank you so much. I am going to close the poll and come back to our presentation here today. So who's going to take us through the session? It's Parth Pande from Finance Buddha. He's the co-founder there and he spent several years at Citibank. Now, I don't want to get into the details. I'll have Parth talk about his experience there and share a few lines about himself. So Parth, please take it ahead.
Hey, thanks, Shivani. Thanks for the introduction. So, guys, I'll sort of first take you through my own background and then spend some time about, the topic at hand, which is the digital transformation in finance. So, I was with Citibank for nearly a decade before setting up Finance Buddha. We set up Finance Buddha around 5 odd years back. I did a variety of jobs at Citi, ranging from sales, credit, product management. In my last role at the bank, I was basically heading the entire southern region asset P&L for the bank across all the asset products that the bank did. So that was across cards, PL, mortgages, etc., SME. After having spent close to a decade with Citibank, I decided to set up Finance Buddha along with a couple of my co-founders. Finance Buddha is largely a discovery platform for as retail asset products. We do 3 products on the platform. We do consumer personal loans for salaried individuals. We do SME business loans for small and medium enterprises. And we do mortgage loans for people who are looking at buying or purchasing a property. We originated close to $1 billion of loans on our platform last year. We ended up funding close to $300 million out of that. So we effectively act as a platform for consumers to discover banks and for banks to discover consumers. What we do differently vis-a-vis some of our other some of the other platforms in the market is that we are a full stack company. So we take a transaction to closure. So we are largely a conversion focused, transaction driven organization rather than a lead gen kind of a model. That we believe gives us a larger handle on the entire customer experience that consumers can have, and more importantly, gives us various insights on the overall journey of a transaction. So that's where we sort of differentiate ourselves. We serviced over 500,000 consumers on the platform now. Yes, given my background with Citi and then subsequently my background with Finance Buddha, LeadSquared was kind enough to ask me to conduct a webinar. So here we are. I'm happy to, the way we would move forward in this webinar is that I am dividing the entire conversation into 4 different parts, which are different facets. So while these would typically be the life of any financial services transaction, largely the 4 steps that go into any transaction. And I would sort of take them one by one and then sort of talk about them in detail, which will give you a perspective of how, sort of things have moved forward, what are the key tips, etc., that one can look at. And if there's any questions, please feel free to sort of, just sort of ask them, and I'm happy to sort of take them up during the conversation. What I would try to do is, in the interest of time, keep every single aspect of the conversation sort of equally divided. So maybe spend between 12 to 15 minutes on every single part. If there is some particular part of the conversation which is of more interest to the users, then we are happy to do that as well. So that's typically how we would want to, or I would want to rather run the webinar. So typically the way I've divided, which is pretty common across any financial product. So whether you're doing a banking product, whether you're doing a lending product, or whether you're doing an insurance product or an investment product per se, effectively any transaction typically has 4 layers to that. The first is obviously the onboarding or the acquisition part, which is the customer acquisition piece. Now, typically, most conversations tend to be around digital acquisitions. Now, I would want to make the conversation a lot more broad-based, because digital acquisition is a very small part of the entire sort of digital journey that a customer goes through in any financial product. So, and most people tend to sort of confuse digital acquisitions with an online marketing capability. That's obviously a component of the entire piece, but that's a very small part of the financial services industry. So we'll talk about acquisition, how to acquire customers, how to sort of target them, how to make your funnel more efficient, etc., etc. The second part is the processing, operations, decisioning piece, which is sort of the middle layer of any financial services product. Most of the times, it doesn't get sort of spoken about as much as probably the acquisition piece gets spoken about, but a very key component of the entire transaction. In many ways, for a lot of companies on the banks or fintechs, this would typically be their secret sauce, which is how do you sort of underwrite consumers, or how do you decision them, or for insurance companies, how do you issue policies, etc., on the fly. So that's the second part. The third is the delivery and a documentation piece. Again, not the fancy part, but very important part as well. There is no financial product without documentation, unfortunately. And even from our entire compliance and regulatory point of view as well, there's a whole host of activities that need to be done there. So that will be the third part that we'll speak about. And then the fourth part is more about customer engagement. How do you cross-sell? How do you service your customers better? How do you do your post-sales piece more efficiently? So what I've tried to do in this sort of webinar is just talk about high-level items, because obviously we really don't have so much time. However, I would want to sort of make it really detailed in terms of taking each of these components up, and really sort of leave you with, tips to really focus on, or just sort of high-level macro points for you guys to sort of take out of this engagement. So that's really how the flow of the sort of the conversation will be. So I'm going to now start discussing the acquisition piece. Right. So I think there's pretty much common consensus about the large demand of financial services products in the industry. Pretty much everybody wants them. All consumers through their sort of life journey undertake financial products, right? So it's an inherently an underpenetrated market. There's a large sort of sort of a large gap between what consumers want and what consumers have available for them. So there's a large demand in the market. However, just having demand is not necessarily a success mantra in the financial services space. So typically the financial services industry, whether you take any product, right, is a largely an inefficient funnel, because the number of people who look for financial products are very, very high, but the number of people who end up consuming these financial products, uh, that number is not in the same proportion as the number of people who are looking for products. So what's really happening, right? So what's happening is that there are three phenomena that are sort of taking place. One being that there are a large part of consumers who are just sort of researching. They're not necessarily looking at consuming the product right away, but they want to generate information about products, right? Or they want to consume information about these products. So you need to sort of look at these consumers who are largely at this point of time prospects, and look at ways and means of engagement with these guys to ensure that subsequently when the need arises, you are available through your platform to really service them. In addition to that, even from the consumers who end up going to a web platform or going to an offline platform or going to a bank platform, uh, there are very few consumers who end up finally getting the product. Now, a lot of this may be because there are customers who are competing on different platforms, or it could also be that the processes that are there in the product delivery are not very efficient, and consumers then drop out because they are not getting the service that they're looking for. A case in point of this being, say a loan, for example. Now, if I'm looking at consuming a loan, there's a definite time frame within which I want to consume that loan. Now, if the process will take 2 times the amount of time that I had initially envisaged for the product, I may not end up consuming the product, or I may create other alternate ways of consuming that product. Maybe I can go to my friends or family and take that loan instead of going to a bank and taking the loan, right? So effectively what happens is that funnel management in this business becomes a very, very critical aspect, which is to say, how do we ensure that the top of the funnel and the bottom of the funnel are completely optimized to say that we have not a scenario where we have high leads and then low conversion. That's typically a problem, right? Also, what is happening today is that largely digital acquisition is a function of people competing for these customers through various paid channels, right? Now, this is largely your SEM driven strategy or your search engine marketing driven strategy, where you are sort of either competing for these consumers on a platform like a Google or a Facebook, or through a variety of other sort of platforms trying to sort of get these consumers. I think what a lot of organizations or a lot of platforms do not do is develop a strong content strategy. I think this is very important from an acquisition perspective, because consumers want to know about financial products. They want to understand how does a financial product work? What are the various facets of the consumer, sort of the financial product? How does one go about consuming the product? What are the benefits that these products will add in their lives? How do we compare products? How does my need stand against the variety of products that are available in the market? I think there's definitely a gap there. A lot of uh, platforms today are competing for customers largely through paid channels, right? And that's really one of the reasons why financial services keywords across industries, whether you're taking wealth management, sort of insurance or lending, the cost for generating the lead is extremely high, because you are sort of competing for the customers, because largely you're using a paid medium to reach out to these consumers. Now, if there is enough work done on developing a strong content strategy, that could help you reduce your cost of acquisition significantly for whichever consumer financial products that you're sort of catering to. And it also helps build a much stronger engagement with the consumers. I think fourth point is my favorite point, which is the real matrices versus the vanity matrices, right? See, today, because financial services is such a large play, and then there are so many sort of products to offer, what happens is that we tend to always look at a variety of sort of matrices, which may be great to measure, but really does not add any value to either the organization's end goal, which is to generate revenue, or the customer's end goal, which is to consume a product, right? So we end up tracking a lot of matrices, which are sort of just vanity in nature, right? So we want to know how many people landed up on a page, how many, what's a bounce rate. I mean, those are all important matrices. I'm not trying to take away from those important matrices. But I think a large chunk of us, what we do not do very well is track conversions, because at the end of the day, your funnel is only as good as what it's converting, right? So I think it's important for us to sort of break the clutter and really focus on conversion-led matrices rather than just vanity-led matrices. I think this is a very important point, especially if for somebody who's sort of a digital marketeer or somebody who's largely focused on getting more and more consumers on the platform. I think it's very important to sort of break it down and say, we'll definitely track those sort of large macro matrices, but it's equally important to track what are we converting. And when I say converting, let us try to go as granular as possible and track the number of consumers who are actually able to consume products basis the content or the sort of the pricing strategy that you got the consumers with, right? I think the important point, the next point is really my learning with the financial services business for the last 15 years over that city and now at Finance Buddha. As much as we would want consumers to do pretty much things on their own, Indian consumers love assistance. They love somebody to talk to. They love to meet somebody. Now, it's kind of sort of a different point of view from what a lot of other digital platforms or digital marketeers would tell you, that we would want to create seamless platforms, we would want to reduce friction in the entire system. But what we have seen is that consumers that we were able to give some kind of assistance to, now whether that's an assistance through sort of a call center platform, whether it's assistance through a chat platform, whether it's even assistance through a simple sort of a Q&A model, the stickiness of the consumers is very high, right? But if you want to sort of, because what happens is that till date, you are, other than maybe just a very basic financial product, large chunk of financial products typically are a combination of digital plus offline, right? And because the offline leg is equally important or as important as the digital leg is on the financial services space, that typically requires assistance. And obviously the education of financial products is not very high in India. So it's very important to create assistance. I think that will be one of, so these two tips would largely be what I would sort of focus on, especially given the acquisition side. I think also and this again, the last point is sort of linked to the funnel piece, where because you have a large funnel of consumers who end up being your prospects and not necessarily your consumers, you definitely need to invest in strong CRM platforms, strong engagement platforms with the customers to ensure that these prospects are moving towards being your consumers. So if definitely the guy is reading about financial products or he's interested in a financial product, then typically during sort of down the line is when he's probably looking at consuming these products. But because large chunk of our engines are developed around lead gen and not necessarily prospect follow-up, we tend to lose out on a population which may be looking for information today, but maybe looking at buying at a later date. So it's very important to sort of build strong CRM platforms, strong engagement models, which can help us with constant follow-up with the customers, can help with us with retargeting these customers better. And definitely platforms like LeadSquared are adding tremendous value as far as that particular piece is concerned. So what I would largely leave you guys with on the acquisition side is that it's not the be all and end all of a financial product. Of course, it's the starting point, but we need to focus on all the other facets of the life journey of the product for us to give a great customer experience. Secondly, please focus on conversions, leads, in isolation are meaningless, irrespective of whether you are a lead gen platform or a full stack platform or a manufacturer. At the end of the day, what matters is the number of consumers who end up consuming your products and not the number of consumers who end up showing some kind of an interest in your product. Thirdly, it's very, very important to mix an SEO strategy with an SEM strategy, because a standalone SEM strategy is expensive. It's sort of it's momentary because you are sort of catching the consumer at the point of time when he's looking for the product, but he really doesn't build any engagement with the consumer. So it's very important to create a strong content strategy. Now, this requires you to invest time, energy, effort in ensuring that you are able to create relevant content to consumers. It requires you to do a lot of research, but I think it's a very important piece. Uh, Very important to track conversions. Very important to create assistance. Indian consumers love it. That's been our experience. And as much as we would want to push people away from an assistance-led model to a sort of a self-discovery model, we have realized that with assistance, the conversions tend to go up significantly. So you need to think of ways and means of creating this assistance for consumers, and really are able to give the consumers the experience that they're looking for. So this would largely be what I feel about the acquisition piece. Now, if there's any specific questions that anybody has around customer acquisition, around the entire digital sort of customer acquisition play, I'm happy to take them right now. Otherwise, we can sort of move on to the next facet of the webinar.
So Parth, I think we can move on. So I don't see
Sure.
any questions coming in just at the moment.
Sure. So either I'm doing an excellent job or I'm really doing a really bad job. Okay. Sure. Okay. Moving on. Now we come to the processing, the operations, the decisioning element of any financial journey. Now, typically, when when marketeers talk about customer acquisition, when financial services businesses talk about consumers and customer base, etc., we largely focus on the acquisition play, right? We largely talk about our marketing strategy, our acquisition strategy, our sales strategy, right? But what doesn't get spoken about very often is how do you process a transaction? How do you make it more operationally efficient? How do you ensure that you are able to decide how to give the product to the consumer better than or more efficiently than some of your other competitors, right? So I personally believe that this is an often ignored, but it's probably one of the most important part of financial services, right? Uh, Customers are looking for product delivery. Customers are not looking for platforms to go out and give their credentials to where the consumption of the product does not happen, right? And that's not possible without optimizing the entire processing and operations leg, right? I think a large chunk of technology is today built on making the front end better, which is to say that I will invest in a more efficient acquisition engine. But what most people do not do is spend and build technology which helps us give the relevant consumer experience to the customer on the operations and the processing side. Because ultimately, if you do not process the transaction, if you do not make it operationally efficient, if you do not decision the customers faster, the customer is not able to consume the product, right? So what we have seen is that lead generation models who do not own the financial ecosystem typically end up leaving the customer sort of somewhere in the middle, high and dry, right? So what we feel is that a full stack platform gives you a lot more control over the customer experience, right? And this is kind of linked to my earlier point on conversions, is because if you want to really sort of create a benchmark on how many consumers you're converting, you need to have the ability of going back and trying to own the entire stack. Now, what I mean about that is that if you if one was to create only a comparison platform where you could give information out to the consumer and then sort of give it off to a third party to really do the dirty work of operating or processing a transaction, what typically happens is that consumers do not get the experience that they're looking for. There's kind of a break in that experience because they move from a platform A to a platform B, and in many cases a platform C. And in that process, the consumers end up not necessarily deriving the complete value out of this. So I think it's important in whichever industry that you are in to really create a full stack kind of a solution. Now it's far more difficult to build. It obviously takes much longer to build, but the inherent value that you're creating, not only for the organization, but also for the consumers, more importantly, is extremely high, right? So it's very important to be present across the entire journey of a transaction rather than limit yourself to just the origination part of the transaction. Sort of an important part which probably gets missed out in a lot of conversations is that a large chunk of financial services processing happens offline, right? Now that's a reality. It still requires a bunch of documents. It still requires a bunch of processing. Now, unless and until you are able to digitize that part of the experience, it kind of makes it a breaking point for consumers. So I'll give a sort of a simple example, right? So if you're creating an insurance comparison platform, right, but it still requires you to then collect an offline document, and there is sort of no technology to make that efficient, as the customers can't come to your platform and upload some documents or just use some digital documents to sort of make the process faster. If you do not build that leg, what happens is that a large part of the processing then moves offline, right? And then it takes away from the consumer the experience that he was looking for, he or she was looking for. So I think it's very important to invest in technology which makes the offline leg become digitized. I think a large chunk of what we think of digital is largely related to digital acquisition, but I think the point that I'm trying to make here is that it's important to make the entire offline leg, which is a part of every financial services transaction, to invest a lot more technology in that. Now, whether that's technology for processing documents, whether it's technology for reading financial documents, whether it's being able to look at a variety of data points on the consumers to make a quicker and more efficient decisioning, all of that needs to be done to make it a seamless experience for the customer. I think the next point is really for platform like Finance Buddha, really our secret sauce, which is to say, can we create a matchmaking or a decisioning system which helps us give to the consumers pretty much on the fly a really sort of in principle yes or no output, or maybe in the case of an insurance product, really getting to consume the products there itself, right? Rather than then waiting for a long period of time to consume the products at a later date. This is really the secret sauce in many ways for sort of fintech platforms, is to say that how do we match make the customer's profile with the relevant set of products that are available for them? How do we ensure that we are able to sort of deliver to the customer the best possible product basis their profile? And this is largely what would differentiate one platform from another. This is really your IP, this is really your algorithm, this is really your differentiation, which is to say that how do I take the same problem, which is to get the customer to consume a product, but how do I do that more efficiently, and how do I ensure that the consumer ends up getting the most relevant product? I think this is a very important point. It requires platforms to spend a significant amount of their time and energy in building this, but it's a very important piece. I think one of the reasons why I'm a great advocate of building technology to make the processing or the operations part of any transaction more efficient, it's because it also gives us a lot of insights on the customer behavior. Right? It's really a piece where we get access to understanding consumers better. It's really a place where we get a whole host of information about the customer, and we are able to then use some of this information to ensure that the customer ends up getting the most relevant products that they sort of have available for them. So I think it's important to build a full stack model which gives you access to a lot more data on consumers, which gives you a lot more insights on consumers, and it also increases your ability to then target the consumers in a far more efficient fashion, right? So I think it's an important piece. It's an important piece to really deliver to consumers a seamless experience. And more importantly, I would say that there are three parts to this particular leg which will differentiate one successful platform from another, and they would largely be efficiency, customer experience, and the speed. Because most people on the financial services side only come to you when they're looking for a product and want to consume the product because the need may be inherent on them or inherent with them. Now, it's important to invest in technology, invest in processes which will make the entire operating flow far more seamless. And that's really going to help build a much stronger engagement or a much stronger brand with consumers. So I think at a very high level, I think it's important to look at transactions in totality and invest in technology on the operations technology in making the front end far more efficient and then not being able to deliver the customer a great experience because your processing capabilities are not as efficient as maybe your acquisition capabilities may be. So I think this is a very important piece, often gets ignored, but I thought it was important to speak about it to give you a whole sort of a holistic 360-degree perspective on what goes on in the life cycle of a financial transaction. If there's any specific questions where somebody wants to discuss anything about this particular piece, happy to do that. Else, moving on.
Yeah, let's move on, Parth.
Okay. There is no financial product without documentation, right? Now, at the end of the day, whether we're consuming a lending product, whether we're consuming an insurance product, whether we're consuming need to collect pieces of information on consumers, which is largely derived out of the documentation. There's also a complete regulatory angle to this, where for any product that we're doing on any platform, it's the liability of the platform to do KYC, which is to ensure that you're compliant with the law of the land. And hence, it is difficult to imagine the entire financial journey of a transaction without necessarily focusing on the documentation piece, right? Now, typically, this is where we see that the maximum amount of friction gets created because consumers may not have easy access to documentation, or they may not have documentation available on real time. And secondly, more importantly, they sometimes feel that they are sharing too much with platforms without necessarily having a clear line of sight on the consumption of the platform. I think this is a piece where, with the ecosystem that the RBI has created, with the ecosystem that the government has created, it's possible today to process digital documentation in a far more efficient fashion. Yeah, so I'm seeing a question. Okay, so as far as OCR is concerned, I would say, there are, so I think the key piece here is really your ability to read digital data. OCR is slightly difficult. I mean, it's not necessarily something that's worked very efficiently because I mean, sort of the matchmaking percentages are fairly low. You can use your fuzzy logics, etc., but you would not necessarily get a very high degree of match on OCR. I think it's important to really be able to build technology which is around really understanding digital data and digital footprints of the customer. You can obviously use a variety of third-party platforms here. For example, if you want to read, collect sort of bank statement of the consumers, you can look at platforms like Perfios, etc., which will give you access to sort of the banking data of the consumers, obviously with the relevant consents being taken from the consumer. This is also a play where you kind of border on the variety of privacy sort of guidelines that are laid out. So you need to be clear about what is the value of the information that you're collecting and why you're collecting what you're collecting, right? So a lot of the platforms today are scraping your SMSs, reading your contacts, etc., which is kind of bordering on sort of infringing privacy of the customers. So I think a large chunk of data that I think is relevant is around consumers giving you that information in various PDF documents, etc., and then you being able to create the relevant technology to really scrape these pieces of information and then put them on your databases and really then use analytics to uh, sort of understand consumers a lot better. Um, uh, but I think that I think a large challenge here is that OCR, as much as we would want it to really be very accurate, is not necessarily a very accurate sort of problem solving tool at this point of time. Various kind of OCR technologies that are available. Uh, I think it's also important to understand the entire regulatory element here, because there is obviously there are certain things which are mandatory and requirement, which is sort of requirement of the regulators around what you can and what you cannot do. And it's important to understand in detail what those regulations are. And at the same point of time, use some of the eKYC. I mean, maybe if we had these conversations around a couple of weeks back, I would have taken a very different view on eKYC. But given what is happening right now, we also feel that there are various other kinds of sort of I mean, there is sort of the regulatory environment around KYC and around documentation is changing very fast. So one really needs to make the process far more seamless for the consumer by ensuring that we have the ability to process some of the digital document that will be shared by the consumer. So whether it's reading PDF documents, whether it's really integrating with third-party sort of platforms, I think all of that is important to ensure that the delivery of the product happens seamlessly. I think also it's important to do this with a lot of speed, because consumers typically in financial products are really looking for speed. So I think this is a very important leg, should not be ignored, but the idea is to sort of really look at making it efficient by really sort of investing in technology to make this process much more faster and much more efficient than what it is otherwise possible. So any other questions? I think alternates will emerge. Definitely, I think there are various alternatives around QR codes, etc., that are being spoken about. I think, in my opinion, we will move towards a system where we'll probably have both these platforms existing in parallel, where you would have the physical piece as well as certain forms of the online KYC existing. However, it is our belief, and I think the belief of the entire sort of ecosystem, is that because the online KYC piece is easier to do, consumers would by themselves migrate to that rather than going and give out physical documentation. So I think it's important to give the consumer the choice, which is what the Supreme Court has sort of tried to do by giving, I mean, which is what any framework would try to do by giving the choice. We feel that given both these options, if they were to exist for the consumers, most consumers will choose an online KYC or some variant of that, rather than doing physical verification, because that's time consuming. And large chunk of consumers today really believe that speed is of the essence. So I think this is something which is evolving, but it is our view that I think both of these will exist in time rather than sort of one over the other. Okay, so I think you are more coming from a sort of a mutual fund or an insurance point of view, which is to say that is to face-to-face mandatory despite KYC. In the current scheme of things, after the Supreme Court notification, I think it will be till the time or unless explicitly stated by the regulator. I think from what we hear, all regulators, IRDA, SEBI, and RBI are in the process of notifying really their interpretation of the judgment, and then I think maybe in the next couple of weeks we'll see complete clarity around eKYC. At this point of time, I think it's been sort of most people are reading the judgment selectively and using it to their own sort of sort of interpreting it their own way, as you had seen the example of what the telecom companies were doing till the time the telecom regulator came and sort of gave them specific guidelines. So I think just wait for a couple of weeks. Our sense is that all the relevant regulators will come back with very specific guidelines around what's possible and what's not possible. And I think there are a variety of alternate models being worked on by the UIDI, which will make the KYC process a lot more efficient in the eventuality of eKYC not really existing in the current shape or form. So, okay, thanks. So moving on. Okay, I think this is really where organizations make money, right? I mean, at least financial organizations make money today. So I sort of some very interesting piece of information. Every HDFC Bank consumer, right, has typically 2.8 products of HDFC Bank with them. And so if HDFC was to offer an account, a credit card, a personal loan, a home loan, a variety of other investment, insurance products that they have, that they offer, right? Irrespective of how the consumers ended up going to HDFC Bank for the first time, typically a customer has roughly 3 products of HDFC with them, right? And this is going to be true for each of us as well, right? Because once we build a relationship with any organization, and the organization understands as well, then you can really use the information and data that you have on consumers and the relationship to really create a cross-sell program, and really being able to upsell and cross-sell consumers a variety of other products that you have to offer. Now, this is where typically our cost of acquisition tends to be low, and this is where our margins tend to be high, right? Now, there are 2 parts to the entire cross-sell piece, right? One is typically how you see a large chunk of the traditional organizations operating, which is more around a forced cross-sell kind of an ideology, which is to say that, hey, if you are consuming product A, you definitely need to consume product B, right? So it's kind of like holding a customer hostage and saying that, just because you want to be a loan customer of mine, you also need to be a credit card customer, or just because you are a credit card customer, you also need to be an insurance customer. And customers typically tend to fall prey to that kind of a thought process, end up consuming products, and then realize that, hey, that was not necessarily the most efficient products that I was looking for. However, there is an inherent need in consumers for other financial products as well. So I think it's important to create a very seamless customer experience journey, which can help in introducing a variety of products with the customer during the life cycle of a transaction. It's probably a bad idea to introduce a variety of products upfront, because the customer came to you looking for product A, right? But now that you have enough data on the consumers and you've understood it well, this is probably a right time for you to talk about various other products that you have to offer. At the same point of time, I think what the digital model does is it gives you the ability of creating a variety of point of sale opportunities. What I mean to say by that is that if I was coming to a digital lending platform to consumer personal loan, and now as a personal loan issuer, I understand the consumer well, then maybe I can use some of that information to create a specific need for a health insurance product, because I typically know what's your age, I typically know what's your profile, I typically know whether you are, what kind of sort of debt leverage ratios you're at, I typically know your income, I know where you work, I typically understand who you are in terms of whether you're married, whether you're single, and hence we can then use some of that information to seamlessly introduce certain other products to the consumer. Now, I think it's important to ensure that the products that get introduced are ones that genuinely add value to consumers and not necessarily being a forced sell kind of a model. However, I think it is a very efficient sort of proposition for you to maximize the revenue on every transaction that gets originated on your platform. So I think it's important to create a variety of integrations, a variety of sort of cross-sell opportunities. But I think the key piece here is that cross-sell only relevant products and not necessarily cross-sell products which are irrelevant to the consumer. I think the other piece which we have seen work really well for our consumers, and I think a lot of times from a technology perspective, it's a very simple technology to create, which is just to create self-service portals for consumers. Because a large chunk, so if you sort of do your analytics around why customers come back to you for a particular service, large chunk of these would come back to you for just getting more information about the transaction that they carried out on your platform. Now, whether that means just get your policy documents, whether it just needs to, whether consumers want to understand when is the next premium due, or they want to come back to you to understand when is my sort of when is my next payment due, or it could be that the customers want to sort of get a loan schedule out, or the customer want to get understand how much interest they're paying on their loans, etc. So a lot of this is information that the customer in that entire sort of product journey had kind of forgotten about, but wants to know more during the life of the transaction, right? So it's important for platforms to create engagement models with consumers so that you can create a very simple sort of post-sales platform where consumers could be given their own sort of IDs and login IDs or passwords, etc. They could just log into your portal or create a sort of a customer service portal, which helps them just get basic information about sort of the transaction that they consumed on your platform. Now, this is very important because it's a very strong engagement hook, because you're giving a reason to the consumer to keep coming back to you again and again. I think it's also very important that it helps you reduce your cost of service significantly, because otherwise, as banks, as insurers, as platforms, one needs to invest significant amount of dollars in building the customer service leg. So if you're able to sort of create relevant technology to take that otherwise manual experience out, to make it kind of self-service on the post-sale side, it can really help A, lower cost, and B, create a very high customer engagement. And I think the last point that I would want to sort of leave around the entire cross-sell piece is that cross-selling for financial services organizations, it's either part of the DNA or it's not. It's not necessarily a function of how many products do we have, or I mean, I think the important piece is that, are you even thinking about cross-sell? Are you really looking at leveraging the relationship that you have built with the consumer to really take it forward by introducing different products that he will consume during the life stage? I think this is more a cultural point for any organization rather than just an afterthought. I mean, cross-sell, only organizations which are able to embed cross-sell as part of their culture are successful at it. Organizations which are sort of look at that as just an idea or an afterthought are probably very poor at it. Because at the end of the day, I think it's important to understand that all of us and all consumers for that matter will consume different financial products at different points of time. And it's very difficult to get successful consumers. I mean, it's not very easy to get consumers given the amount of competition that is there in the financial services space today. So I think it's very important for us to be able to build a strong engagement, cross-sell kind of a mindset, which can ensure that you're monetizing your customer base far more effectively than with a very transaction-led mindset, which is more around sort of running on the treadmill every day just to get more and more consumers. I think it's important to balance out your ability to acquire new consumers, but also sort of balance it out by introducing more products to your existing customer base and creating a high amount of cross-sell and engagement with them. So I think in totality, I would say that one needs to think of financial services in totality from acquisition to post-sale service and really look at optimizing different facets of that rather than just looking at components in isolation. And I think my idea of this webinar was to really talk about the different facets of the financial services journey rather than just limiting it to sort of how can we market better or how can we, which are sort of very high level items. I think the idea is, so I would say, quickly from my perspective, I think 4 or 5 large takeaways that I would want people in the financial services domain to really focus on. One would be track conversions. I think it's important, irrespective of what business you are in. I mean, even if you're a CRM platform, it's important for you to track what's really the economic value that you are adding to a transaction. So it's important that you track conversions. Secondly, I think most importantly, you need to ensure that you focus on product delivery and not necessarily just limit yourself to lead gen. There are enough and more people doing lead gen in the market. I think there are not enough people who are focusing on a full stack kind of a model. I think that's important. Make the processes faster by introducing technology in elements where it's probably not very obvious to introduce technology, which is to do stuff around documentation, around processes, around regulatory environment, because those things are sort of there silently sitting on your businesses. If you are able to make those processes faster and more efficient, you have a lot more conversions, you have better revenues, you have a much more successful sort of organization. I think largely more importantly, I think cross-sell is culture. Cross-sell is not an idea. Cross-sell is not an afterthought. You need to start thinking of cross-sell or incremental engagement with the consumers every time you onboard the consumer. Do not look at it as an afterthought. I think those would typically be my top 4 or 5 tips to really run a very successful financial services business. So I think pretty much from my perspective, I think I've covered what I wanted to talk about. If there's any specific question that anybody has on any of the things that we've spoken about or anything else that you want to discuss in the financial services space, happy to do that. Else, I mean, we are sort of done here.
Yes, thank you so much, Parth. It's open to the audience now. If you have any questions, now's the time. Please do ask. We just have a few more minutes left. So we do have a question, in fact, from Pavan, and just for the benefit of the audience, I'm just going to read it out so you understand what Parth is referring to. So he says, not sure if this is the right question to be asked in this forum, but without KYC being formally accepted, would it be possible to disburse a personal loan by Finance Buddha or any company during at least few instances? So, Parth, I'll let you take that one, and then we have a few more questions from Harish and Radhika. So we'll go on to those as well.
Okay, so in the current light of the current judgment of Supreme Court at this stage, we are also sort of waiting for KYC. At this point of time, a lot of the institutions have moved back to a physical KYC model. So we are waiting and watching the space, but at this point of time, it would not be possible to do e-KYC. Okay. What are the upcoming technologies in this area? I think the use of AI is a very powerful sort of play here, because you could pretty much automate a large chunk of the engagement or the conversation with the customer. I think it's very important, because at the end of the day, that helps you reduce cost. So just to, I would say largely, broadly, 3 or 4 things that if you want to read about would be, look at what artificial intelligence is doing to financial services and really the opportunity there. I think blockchain again, because I think the use case of blockchain in financial services is really deep. Uh, I would say these would largely be 2 or 3 of the top of the mind kind of technologies, but that you can sort of use and look at reading up on. Okay, earlier I was working financial company, but now it's pharma. I think, see, there is use case of AI on pretty much every industry, right? Because I think there are 2 or 3 things that are sort of happening if you look at uh, with with the entire sort of digital growth of digital companies. See, one is that we are leaving a lot more data and footprints out there, right? And that's again in machine readable format, right? So, and also as consumers, we are looking at sort of, see, because consumers tend to operate in patterns, right? And pretty much there's a high possibility that the question that's probably in my mind is probably the same question that's there in your mind as well. Now, if you're able to sort of standardize that, then there is a huge use case of using artificial intelligence there. Because typically what happens is that if you look at any financial organization today, they end up investing significant amount of dollars on customer experience, customer service. Now, if I pretty much know the questions that the consumers are thinking of, I can pretty much create an AI engine to answer all of them. Right now, I'm assuming that the same case can be used for pharmaceutical companies as well. So, for example, if I'm a patient and I want to know what it takes for me to sort of get over a particular disease, uh, I think AI can do a great job at that, because probably that question has got answered before by somebody on some forum. If you can standardize that, I think you can use AI pretty much across the board. So I would say I mean, AI is far more broad-based and can be utilized across industries and not necessarily limited to financial services. But given that our experience is largely on the financial services space, I think I'm more sort of capable of speaking about it from a financial perspective than necessarily a pharmaceutical. Okay, so I think we're pretty much done with the questions. So Shivani, I think we can close the webinar now. Okay, I think there's another question that just come up.
There's
Okay.
one last one from
Sorry.
Ravikiran.
So I think that's a very, I think that's a difficult question for me to really answer in terms of for a startup investing in a full stack model. What is the optimum time? I don't think really it's a question of time period. I think it's a question of how you're building the model. And I think we get a lot caught up with sort of, so you can pretty much make money on the first transaction itself. I think because uh, you can pretty much break even or make money if you want to pretty much from the first transaction onward. I think the question that one really needs to answer is that what is the problem that one is trying to solve? And I think once you're clear about the problem that you're looking at solving, then it's also a function of how deep you want to solve the problem, right? Because if you want to spend and you really want to really in true essence do justice to a problem, then you have to invest a lot more time, energy, resources in sort of solving for it, and hence your time period will of breaking even will get elongated by that much more. But just to give you a sense of finance, but we made money in the first year of our operations because we were not necessarily looking at solving all the problems on day one. We started with a small problem, solved that, moved to the next problem, solved that. That's really been our endeavor over the last 5 odd years. Now, if you want to solve multiple problems at the same time, yes, you will require a lot more resources and you will take a lot longer to break even. If you want to solve problems one by one, you will probably do it much faster. So I really, really don't have a specific sort of an answer for you, but I think that's what I can say. Are we going to get the presentation? Sure, and the presentation is available. You guys can access it. I think how to do that, I think Shivani will probably be able to tell you guys.
Absolutely. Those of you who've joined the session, you will get the deck and the recording of this session, so don't worry about that. We do not see any more questions here. So, Parth, thank you so much for the presentation. I will like to invite a guest on the show very quickly. Some of you had questions on technology and what technologies would fit this space. So, I'm inviting our Director of Customer Success. Yes, we have a customer success team, and they try to ensure that the customers are successful. So over to you, Suhas, to share a few lines about technologies being used in the space. And of course, Parth is still around if you have any other questions for him.
Hey, thank you, Shivani. Thank you, Parth. It was really a fruitful session, understanding all the nitty-gritties about financial management. So when it comes to technology, I have observed with my customers, typically few of the technologies that really are influencing the change or influencing the financial systems to get better and better day after day. One is mobile apps, because getting access to the data on the go is very important, so that you can sell more and you can do more whenever you want. So mobile apps are one of the top technologies currently running. And as Parth rightly said, artificial intelligence or the robo advisors are also a useful technology implemented by most of the customers to get an insight of signals from various systems based on different analysis to trigger a cross-sell or an upsell, right? And the third technology is the digital platforms. So there are many standard digital platforms for loan originations and also various social tools available to attract and to manage the customer acquisition, right? And then there are a few other technologies like automated advice for customers or automated assistance for customers when they actually having a journey of their financial investment or any application, etc. Right? And then obviously there are a few other things like predictive analytics and big data, which definitely I think every company would use at the end by collecting the large data, right? And people do also use systems like chatbots, which assist the customer to fill the application or to complete the process without the help of human intervention. But by saying so, definitely in India, we would see a larger trend of assisted sales because people do love talking to the real person and share their thoughts, right? That has been a trend also. So we, being a technological partner for BFSI segment, right? We do have a large customer base handling loan systems and insurance, etc. And we provide technological assistance right from customer acquisition to managing the entire process, including the field investigation or a document collection, right? And also we integrate with various third-party systems which are required to give you an 360-degree view of a particular case or a particular customer, right? By saying so, I'll quickly wind up these sessions, right? And if you actually need any particular details or in detailed demonstration of how do we provide technological help for BFSI segment, you can always write back to us at LeadSquared and we will get back to you. Thank you.
Thank you, Suha. So my email ID is shibani.roy@leadsquared.com, or you can just respond to the webinar mail you got, and we'll take care of it. So Parth, thank you so much for taking the time to do this session for us. The audience, I hope you found it useful. And of course, Parth, if you have any closing lines for us today.
No, I think thanks for attending the webinar. if you need anything, I'm there on, I'm sort of at parth@financebuddha.com or available on LinkedIn. Just drop in a line if you guys want to sort of know more about what we do or more about, what trends we see on the financial services space. Sort of happy to respond to you guys. Yeah, but I think other than that, I think look forward to probably look forward to connecting with a large part of, a large part of the audience maybe sometime again.
Perfect. Thank you so much. Thanks again, Parth, for taking the time to do the session. I wish everyone a very good week. We have Diwali celebrations coming up, so I know a lot of you will be going on holidays. So happy holidays to those of you who are. We will close the session now. Thanks again for joining the session. The webinar recording and deck will be sent to you later this week. Take care. Bye-bye.